from. But let's try and get a political economic sphere report then on what exactly has now transpired. Daniel Silk, the director at Political Futures Consulting, joins us. Was that good enough for you? Did that perhaps tilt things around in any particular direction? Did that offer any kind of solace?
Hello, Ruby. Look, there's no solace here, and there won't be solace here for a number of years, given what the minister has said. The bottom line is, can the minister sell the cost-cutting program to his own trade unions, which has been difficult up until now? The figures are more stark in terms of what the minister announced. The salary freeze is more stark than perhaps what was expected. And I think there's a political dynamic that we simply don't know how it will unfold over the next few months and into the next few years. And similarly, so the minister also, has announced the potential of revenue generation through increased taxes over the next 3 to 4 years or so. It's not spelled out very clearly at all. We know increasing taxes don't always come to fruition. In fact, they can have a negative effect on morale and on collection, for that matter. So I think what we've seen here is an attempt at, crisis management in the short term, and the proof will be in the pudding over the medium term.
Yeah, it feels as though his notion to quite a bit more spending, but not really as to where the revenue will actually come from. I mean, some of the savings will counteract exactly what he's spoken about here. He hopes that the economy will grow by 3.3% in 2021. That's a major base effect, of course, having come from the negativity of this year. Do you think he was bold enough?
Well, the policy framework is still unclear. And if the policy framework was clearer, we could very well have an increase in domestic and foreign investment into South Africa that would increase the growth rate and would raise revenue. So it's all going to be about policy clarity, prudent economic policy, the structural reforms that we've been speaking about for months and months and months. That, to me, still has to come to the party. There's been some movement on that. But it's not enough, I think, to alleviate the concerns of both foreign and domestic investors. And similarly, really, government actually has to become much more efficient in how it manages its own cash. At local government level, where we have dysfunctional local administrations, we can't go on with unfunded mandates to the tune of millions or billions of rand. So the responsibility now is not only on policy, but it's also on government to be more efficient and thereby to introduce its own savings in this entire very complex equation.
Yeah, over the past 5 years, public sector employee compensation grew by 7.2% a year on average, well above inflation. And then he notes and says over the next 5 years, it will need to grow much, much slower. He then panders to the base quite prodigiously there by saying how significant and how important the public workers and public servants are at this point in time. He still hasn't given us a sense of where to from here. What's happening? Do you feel like government still is sort of paddling up a creek, unfortunately, and still not really doing it too well?
Well, government always has to weigh up the realities of the economic situation that we are in, the excessive government spend and also excessive borrowing that the minister announced, with the political ramifications of cutting back on this bloated bureaucracy in terms of numbers and in terms of salaries. What we see today is not just a feature of COVID. It's a feature of the last 10 years of government increasing its wage bill. And it's increased its wage bill partially because there's a political imperative to do so. So the rubber has hit the road, Arabili, in terms of how much more money government can afford. It's hit the road. And I think it has to make some very hard decisions. It now has to bite the political bullet, to use a corny cliche, which can, in fact, end in a series of, I think, very difficult few months and, in fact, few years for the Ramaphosa administration as it finally merges economic reality with, of course, the political risk that it must take.
Yep, when an immovable force then meets an unstoppable one there on this other side, it gets so difficult. Daniel, appreciate the time. Thank you so much for joining us here on SABC News. Daniel Silk, political economy analyst there and Political Futures Consulting Director there, joining us as well. It's a difficult budget to have certainly set forth at this time. Of course, the constraints are quite heavy. In the conclusion, then, the finance minister even goes on to say, today we set out a course to prosperity. Growth is slowly returning. Things are looking better. It's very difficult to see exactly how things will continue to look better when a lot of our money is still going to continue to be spent through onto SOEs, which are dysfunctional at this point in time. It seems that corruption has continued to weigh in on South Africa's economic future. Where to? Where do we get any of this growth picture that we continuously try to tout as well? Then progress with regards to the zero-based budgeting model that the minister has continued to speak about heavily. He says that zero-based budgeting will be piloted at the Department of Public Enterprises and National Treasury next year, and hopefully it will then become a part of the budget system as well by the 2023 year. That'll be quite interesting to also see out as well. As we made note of there, just what is needed from the compatriots there when it comes to the public sector wage bill. Not setting a figure in stone, not setting exactly how much, playing things a little too close to the chest perhaps when one takes a look at the public servants and their expenditure and what exactly is going to happen on that front. The note as well comes through then from the finance minister saying that amongst other things, we will make it easier to do business. We must remove the needlessly complex red tape that increases the cost of doing business. Now, having tweeted this a little bit earlier, the question was, well, you've said the same thing for numerous years and still no response. We're getting the sense that you keep saying this in order to just appeal to a base and still not get it done. What is it that perhaps needs to be unlocked when it comes to the red tape issue? The small businesses who are certainly struggling at this point in time and trying to get through some of their entities and build. Creating a stable and predictable set of policies as we rebuild. There must be universal understanding of the policy trajectory. It seems that even government itself perhaps does not understand exactly where the policy trajectory exactly is going. So how then will you be able to create an understandable one for the broader society, the rest of South Africa? It is not only investors that need confidence, but also the average South African. I can tell you this much, the average South African living in this country might find it difficult to believe exactly where they're going to get this confidence from when you also have an unemployment rate sitting at 42%, an absolute travesty to an economy and a party as well. And even a government that has said that they will put people first and ensure that they have everything they need. Another point that came out then from the finance minister speaking about the international partners was we must use our ingenuity and adapt after the ravages of the pandemic. How do we do that without spending perhaps a little bit more money, which is going to be absolutely necessary too, is it not? And embrace a sustainable future and work towards a green and just transition. All of these words just sound absolutely great, but can we get anywhere with any of it? It doesn't seem like it's working at all. Of course, one of the most stark sentences to have perhaps come out of the budget, the medium-term budget policy statement there by the finance minister, Tito Mboweni, was that right now, government is borrowing at a rate of 2.1 billion rand a day. And that he then says after that, Madam Speaker, we must be careful to avoid the fate of countries like Argentina and Ecuador, that is, that defaulted on their debt this year. It seems more like a question of when and not if, considering the path that we've currently taken. We are continuing to ask ourselves, where exactly are we going to get the funds from? Where exactly are we going to try to perhaps build this South African economy with a state of borrowing of 2.1 billion rand per day? I can certainly guarantee that it becomes difficult. Of course, that does exclude weekends, as we've often been told by National Treasury. Indeed, the difficulty in trying to find the growth picture for South Africa moving forward is going to be a very tough one from here on in. Now, here's another aspect that perhaps we can talk towards then. It is the government, or rather Treasury's notion that they will intend to run primary surpluses on the main budget. Now, let's explain that sentiment then. And this is set to happen by 2025 and 2026. The main budget is, of course, just the budget that is put forward in terms of how much money is received and how much money is then spent by National Treasury. In order to run a primary surplus, that would mean you'd have to still bring in more money than you are spending. To do that, you also need fiscal consolidation. This is what the National Treasury or the Finance Minister said that he would put forward in this medium-term budget policy statement, that it would have 3 years of fiscal consolidation. And in order to get that right, it also means that you cannot spend as frivolously as you have been doing over the past number of years. Yes, that includes the wage bill. Yes, that includes SOEs as well, the likes of SAA continuing to get money. The Land Bank, which, yes, has been a profitable entity for a number of years, but this year continues to struggle and now needs even more money in order to get it right. So all of those struggles, including Eskom, including Denel, including the SABC, all of which are an absolute struggle then, of course, for many. We also want to shift spending from consumption to investment. How difficult are you going to get that right when you still have to sort out your debt? Many portfolio managers will tell you that it may not be such a great idea to get into your investments if you're still sitting with debt. So how then do you plan for the future in that regard? Let's go back to a guest that I spoke to just before the medium-term budget policy statement, Martin Davies from Deloitte, joining us again now. Martin, did you get a sense there that we're perhaps contradicting ourselves in many instances? I certainly felt like we are. We're saying today we set a course back to prosperity. Growth is slowly returning. Things are looking better. It's an MTBPS that is supposed to imply fiscal consolidation, but we're going to spend. Where are we going?
Yeah, Rabila, thank you. It's are we more depressed than we were a couple of hours ago? Well, maybe not depressed, but not overly impressed. That's the best way of putting it. I think for me, the disappointing part for me really was the very beginning of Finance Minister Tito Mbowene's comments, where he was talking about growth outlook. He spoke for about a 3% and decimal pointage sort of forecast for 2021. Obviously, talked off a low base, and that's 2020. But then the following year, he spoke about a sort of a 1.5% growth forecast.
Yeah, 1.7 in 2022 and 1.5 in 2023. Yeah, that's the figures he put out.
And that's appalling. Is that the extent of our ambition? That's below our population growth rate. So if your GDP growth rate is lower than your population growth rate, and effectively you're becoming poorer on a per capita basis. Not so. So I can't understand the lack of ambition. There's no reason why an economy like ours should not be forecasting 3.5%-4% growth constantly ongoing. We seem to be stuck in this low growth funk, if you will, of 1 and decimal points, which is I find hard to fathom. At the end of the day, we're just moving around the deck chairs here, and we're not really addressing the real issues. And we spoke earlier a bit about structural reform.
Yeah.
We're tired of and you named a few, the sort of state-owned junkies queuing up for their sort of budgetary fix. We can't have that, and on an ongoing basis. And clearly, money's been moved from different departments and reprioritized, etc. But at the end of the day, is that without some severe structural reform and also managerial reform within these companies as well as government departments, I'm afraid, we ain't really going to be going anywhere.
Yeah, he also then goes on to say, but we cannot allow our recent fiscal weakness and the pandemic to turn into a sovereign debt crisis. Are we not already there, or am I being alarmist?
Look, we've been talking about fiscal cliff for a long time, and one country he mentioned, which he spoke about this a few weeks ago, which really does concern me at no end, is Argentina. Now, Argentina, there's been analogies of, which country do we resemble? Clearly, Argentina is a country which has had bailout after bailout, IMF restructuring, but populist politics and leftist ideology and just generally socialist economics prevents the country from moving forward after decades and decades of more of the same. And I'm afraid, at what point does a country say enough is enough and we need to move beyond this? And as soon as the as the state, the government continues to pander, arguably, to the ideological interests, I'm afraid that is our destination. So yes, we are on the cusp of a debt crisis. Managing the debt is concerning. You mentioned the borrowing on a daily basis. And as I said, we talk about a developmental state previously. Now we talk about a capable state. I'd like to talk about an agile state, and something which I was in, when was it, 1997, 98. I was in Singapore for a while at the height of the Asian financial crisis. The Singapore government, which we often laud, looked at actually 15% pay cut across the board for every single public sector employee, prime minister to post office worker, immediately to reposition the economy for more agility and more efficiency. Now, what I've been observing in this since March, effectively, since lockdown and various stages thereof, the vast bulk of the pain in our country has been felt by people in the business, people in the real economy. Everyone has taken a haircut. People not having income, and it's a severe pain. Is that pain being felt in the public sector? Clearly not, when a labor union still talks about a pay increase of 8%, and that really wasn't really addressed in this budget speech update. So I think if we're all in this together, public sector needs to come to the party beyond just moving the money around.
Yeah, in trying to put that money around, and you make such a good point with regards to that pay cut issue, though. We haven't nailed ourselves to any figure per se. I mean, the minister notes how it's been increasing by around 7.2% over the last 5 years, and over the next 5 years it has to decrease by much, much lower. What exactly does that mean? Are we perhaps being non-committal here, which isn't really helpful, is it?
It's non-committal. We don't want to upset other people in the tripartite alliance, perhaps. That I'm afraid is leadership is about, leadership is about making tough decisions at difficult times. And I'm afraid, he spoke also about it's almost consensus budget. If the plane is hitting turbulence, if the plane has technical problems and the plane is going down in flames, arguably, what does a pilot do? The pilot rectifies the situation, gains control of the plane, and continues to fly. He or she, the pilot, the leader, does not seek consensus amongst every passenger as to what to do. That's why he or she is the pilot. And I'm afraid that's where we are. So we need to see greater leadership. It's not about consensus seeking before decision is made. It's about making active decisions, informed decisions, based again on that phrase we used earlier, pragmatism, not ideological ones. Not pandering to vested political interests, particularly those of an ideological bent, and getting the country corrected. I think as most honest and sort of patriotic South African citizens, that's what we want to see happen. Yeah, it certainly is what we want to see happen. It feels as though the pilot of this plane is steering us down and still trying to comfort us at the same time. Martin Davies, appreciate the time. Thank you so much for joining us this afternoon from Deloitte. They're giving us a rundown perhaps on just where we will get things right, if we even can. So difficult. Now, the Treasurer General at the Black Business Council is hopefully going to be able to join us as well very soon, and we'll hopefully get into conversation with Bonolo Ramogele as well with regards to this medium-term budget. Just a rundown very quickly as well with some more information with regards to the medium-term budget policy statement being put out by the finance minister there. The medium-term fiscal strategy tries to narrow the main budget primary deficit from an expected 266 billion rand in the next financial period to around 84 billion rand. Then that's a deficit. So they're trying to narrow that down, the primary deficit, to 2023-2024, and then try to achieve that surplus then by the 2025-2026 year. So we'll see whether we can get that right. The Treasurer General at the Black Business Council, Bonolo Ramogele, does join us now as well via video link. Bonolo, thank you so much for the time. Appreciate it. Did that spark enough confidence for you? Do you feel as though we are headed to some sort of prosperity, as the minister put it?
Afternoon, Arabil, and afternoon to the viewers at home. Look, we are not naive to the realities on the ground and the realities that the country faces, in that South Africa effectively has hit a bit of a brick wall when it comes to finances, and we need to find creative ways and make hard choices in how we get ourselves out of this quagmire and set the country on a positive path for generations to come. So, one, as the Black Business Council, we welcome the minister's posture and stance on debt stabilization, because if you look at it, Arabile, we're already spending roughly 200 billion rands on debt service costs. That's not the debt that we're raising. Those were the costs that we're paying, the interest that we're paying, instead of that money going towards health, education, and so forth. So given the pandemic that we have been facing, we have now been forced to borrow more, and those debt service costs are going to skyrocket. So we appreciate that the minister wants to stabilize that over the medium term. But one of the things that we are especially concerned about is the continuous pouring of funds into SAA, and we're not actually seeing the strategic nature of that particular investment. We welcome the investment. I mean, the money that has been that is going to be put into the land bank, because unfortunately, you and I have to eat until Jesus Christ comes back, and we do need to stabilize the agricultural sector. That is very much welcome on our end.
Yeah. Bunolo, the minister spoke quite vehemently about how, private sector has made sacrifices and even negotiated salary cuts in order to keep businesses afloat. I mean, a whole host of your members would have done a similar thing, with some even forcibly having to retrench some workers too, still to try and keep that business afloat so we can still boost the economy. What is your sense then of, being non-committal, if I can call it that, by the finance minister on the public wage bill, and that not necessarily decreasing by a specific or specified amount? Does that perhaps worry you at all as the Black Business Council?
Look, you are indeed correct, and the minister is correct. If you look at the latest Statistics South Africa report, you'll find that liquidations have been up by roughly 27% in the last quarter. That was measured, and job losses were roughly around 648,000. That is not even people who have lost income or reduced income. Those are people who are effectively without a job in the last quarter alone. And those were largely because of the private sector having to make hard choices. And some businesses have to save jobs, have had to cut salaries and so forth. And the issue with the minister, we understand why he cannot say certain things, because you will appreciate that, Arabile, these issues have a tendency to be political. You do need to take into account the views of the labor unions, and you do need to take the views of even other stakeholders. So you cannot just, willy-nilly say it, because it can create problems when you have to get into the actual negotiation. So what the minister has done, by actually putting this into the public domain, he's effectively setting the tone to ensure that those discussions actually happen.
Yeah.
But we do need to factor in another issue, Arabile, in that the public sector, in as much as it is bloated, the public sector actually needs to be increased, because you and I know that when you go to a public hospital, there aren't enough nurses. That's a public sector, workforce that needs to be, looked into and increased. But the issue of the pay, you need to be sensitive how you engage in it. We can't be, naive and think that, we work in a dictatorial state whereby government can do as they please. We do need to enter those negotiations with the unions, take them into confidence, and ensure that, we stabilize our spending, because our spending is skyrocketing, and majority of what we are going to be spending on over the medium term happens to be employee costs. So we're now forced to borrow in order to be able to invest into the capex that actually keeps the economy growing.
Yeah. Bunolo, if I may then play devil's advocate here, was there lip service being given to us when the minister said we're going to make things or make it easier to do business, remove the needlessly complex red tape that increases the cost of doing business. We've continuously heard this, but it doesn't seem to get done.
That one, I think that maybe the minister's speechwriters had run out of, they needed to complete their speech within a set amount of words. We've all done it in varsity, where you needed to have a set amount of words and you just slot in a few things. But to be more serious, look, that is something that will need multiple departments, especially when it comes to the DTI and the small business development.
Yeah.
And also even other departments that need, for example, issues such as when you are doing a construction project, municipalities are a major hurdle that sometimes bring projects to a standstill.
Sure.
Because you've got councillors who are going to sit on approvals for years on end, before a construction of projects gets going.
Sure.
So we think that this needs a multiplicity of voices and a multiplicity of efforts.
Yeah.
And we think that there is a need to have the DTI effectively cracking the whip. I think the more relevant department to be able to do this would be the DTI, small business development. And
Hopefully.
On an infrastructure component, the newly created Infrastructure South Africa would need to actually crack the whip on majority of the projects that are deemed to be key for economic growth, and not only the ones that have been gazetted by cabinet.
Perhaps not enough cracking of the whip being done at present. Bonolo Ramogele, the Treasurer General there of the Black Business Council, joining us and helping us unpack this market picture. Thank you so much for your time. Hopefully then we can cross over as well to the Chief Economist at Nedbank, Nikki Weimar, joining us via video link as well. Nikki, the growth projections for South Africa here quite difficult. The proposed consolidated spending, 6.2 trillion rand over the 2021 medium-term expenditure framework, 1.2 trillion going to learning and culture. So difficult to put forward these numbers as well. Then our revised framework puts us on course to stabilize the ratio of debt to GDP at around 95% within the next 5 years. The stock of gross debt rising roughly from 4 trillion rand this year to around 5.5 trillion in the 2023-2024 fiscal year. So difficult. And what do we do now? 95%, Nikki Weimar, Chief Economist then at Nedbank, joining us on the line there. 95% of GDP is where our debt ratio will sit within the next 5 years. This is still going to be very difficult, isn't it? I mean, we just thought 87% was bad. Now we're sitting with 95% at the very least, and that's the optimistic case there.
Yes, indeed. It's dependent firstly on their economic forecast. So, that means you've got to kind of contain the contraction in GDP this year to just below 8%. And then you have to see the growth return from next year onwards. And this all in the middle, of course, of a pandemic that is still unfolding. The market's very spooked today. Expecting the reimposition of containment measures, maybe even lockdowns in some of your advanced countries. So, it's really an uphill battle. 2020 has really been a horrid year, to put it mildly. But it's not all COVID-19. COVID-19 has made things a lot worse for us, but we've been on the wrong path for over a decade now. And we've left it to the point where, we now sit with a mountain of debt that we will have to deal with in the years to come. And I suppose it is very simply what it means is that government doesn't have a lot of spending power, doesn't have a lot of ammunition. So with the economy in this very big dip, if you like, which I think is putting it mildly, more like a very deep pit of despair, it will take, I think, really a tremendous amount of sacrifice from everybody to get out of here.
I think the right word is crater, really, considering how far down it really is. Growth projections of 3.3%.
So one on the moon or on Mars? I'm not sure which ones are bigger.
Certainly big holes either way. Look, 2021, 3.3% growth rate, 1.7% in 2022, 1.5% in 2023. It still doesn't bode well, though, does it? It still doesn't send the positive sense that, okay, we've put in the reforms and we're actually going to get ourselves jolted and back into action.
Yeah, on the reforms, I mean, there isn't a tremendous amount of information really on the reforms.
Yeah.
And exactly how they're going to make these ends meet. Because the one thing that they make clear is that they've got the same budget deficit, they've got the same whether you look at the main budget deficit or the consolidated budget deficit, and they point out that one of the key reforms they're going to implement there will be to bring down the public sector wage bill, which, as you know, is controversial and currently really been taken to the courts. So how quickly they can progress with that particular reprioritization, if you like, is not certain. And they make the point that they will increasingly be supporting really fixed investment as opposed to consumption expenditure.
Yeah.
But where they're going to get the money for that and what they will be cutting is not clear. I mean, they do show in their expenditure priorities that it will go more towards infrastructure and that there will be some space through the infrastructure fund for growing. But for it to build up to R1 trillion in new fixed investment is difficult to imagine. I'm not sure how that will be done. And it's not really made very clear in this particular mini budget. And then on the actual reforms, even the reconstruction and recovery plan, they're good ideas there. The fact that we going to continue pressing ahead with reforms in the energy sector, that Eskom is making progress with deregulation and restructuring, that they will be auctioning out awarding the tenders by the end of this year to release new spectrum or additional spectrum. Those are all good elements, but in South Africa's case, we actually need quite a significant amount of uncertainties to be resolved. In other words, how will land reform be implemented? How will the change in the constitution regarding expropriation without compensation affect property rights in South Africa? We need clarity on those things. It's already done, so we're not going to go back. But we need to know what are the bounds here.
Yeah.
Foreign investors need to know that. Those are the people whose money we need to get our economy out of this slump.
Yeah.
The other thing that no certainty have been provided on is how exactly are they going to change the Resources and Minerals Act. The mining charter is still a controversial issue. So a lot of these disincentives that raise the hurdle rates to investment in South Africa, none of those have actually been cleared up. And that's really what we need to make progress.
Sure. Whether we'll even make progress over the next couple of years is perhaps quite difficult to ascertain. Very quickly, government proposes a 3-year fiscal consolidation, or proposed a 3-year fiscal consolidation, but it seems like we're spending everywhere else. Was that contradictory?
No, well, if they stick to the plan they've put out, it is it is fiscal consolidation, yes. And, it is going to be very rough for South Africans, I think, and for ordinary South African households and the poor middle class that is already, taking a tremendous amount of strain in South Africa. The reality is you're going to have reduced services, reduced consumption expenditure, in order really for us to deal with this enormous surge in the budget deficit as a result of COVID, the collapse in tax revenue, and the increased spending government had to undertake. Let's be honest. I mean, government had a responsibility to the most vulnerable in our society to carry them through this very, very difficult time. We've all taken a big hit, but for the poor, it has been that much more severe. It's the difference between not having a meal that day or having something to eat. So I can understand that. I don't have an issue with that. But the problem is that I think, I just think that they're not willing to make some of the more difficult decisions in the labor market around legislation, around fighting vested interests in order to truly restore investor confidence. And that is the bit that concerns me. So it will be fiscal austerity because you will have cuts in services, and at the same time, you are also going to have higher taxes.
Yeah. 100%.
And the higher taxes, of course, will also put pressure on household income.
Sure. So tough. I don't even know where we're going to go to from here. Nikki, appreciate the time, though. Hopefully we'll continue to dissect it as much as possible and chat to you very soon as well. Nikki Weimar, Chief Economist there at Nedbank, joining us to give some sort of rundown of how difficult the scenario certainly is at present. Just also, some other aspects have, of course, come through. Speaking about the employment initiatives, which the president had, of course, spoken through about in his reconstruction and economic recovery plan as well. Government or National Treasury announcing a 12.6 billion rand allocation to that in his financial plan. One of the issues was a provincial equitable share, which will be augmented by 7 billion rand in order to try and support jobs at fee-paying public schools as well and government-subsidized independent schools. At the same time, there will be 600 million rand, which is said to go to employing early childhood development and social workers, which is certainly very critical in employment. It's important, should I say, thought that perhaps money would have actually been taken away from some of these segments, but they're so critical and so important, and indeed more money being plowed into them. 2 billion rand is allocated for working for fire, working for water, and working for forests. All those initiatives have certainly needed quite a bit of money as well. The district development model will fast-track infrastructure and general socio-economic development. That is certainly the hope then, of course, by National Treasury. One of the other things that have been a critical part of President Cyril Ramaphosa's plan a little bit earlier on, the 500 billion rand stimulus package that he had hoped would certainly boost South Africa, was the loan guarantee scheme, which hasn't really had much of a big take-up then as well. And the finance minister even today saying that he's working indeed with the banking associations of Southern Africa and the South African Reserve Bank to review that entire process and ensure that take-up is increased in some potential way. I will continue to say this, however, about that loan guarantee scheme. If you're aiming to stimulate or aiming to pick up or boost South Africans, offering them loans is not necessarily going to help them in this way. Yes, you offer up cheaper loans, but let's remember this. You're getting people into more debt here in South Africa. Whether they be a business or anything of that sort, they're still getting themselves into more debt. You may say that because they get a lower interest rate and they only have to pay those loans after a year, that perhaps things are a little bit different. But let's remember, in doing that, they still increase their leverage, and after a year, if their business isn't doing well, they're still going to have to pay you back that money, government, and you're still asking them to stimulate South Africa's economy. How? When they're still going to have to struggle from the long-term effect of this COVID-19 pandemic. I'm not saying we have free money to just offer up, but if we are going to have a stimulus package or a guarantee scheme, the likes of which you're putting out of this 200 billion rand, then it may be necessary to reconsider how exactly you put it out, how exactly you put it forward. One, does it have to be in the form of a loan? If not, perhaps we could have thought of other economic factors and other ways to help. Perhaps we could have induced some greater economic factors in trying to build entities and their businesses, forego certain costs at a time when perhaps they can pay them at a later stage and not have to necessarily go backwards and repay some of those as well. So I continue to have had a few issues with that loan guarantee scheme, and I'm not necessarily sure it is the best way to stimulate South Africa's economy as we move forward. But again, that is just the personal opinion. Let's continue to perhaps get some more sentiment then out of the main budget deficit as well. 14.6% is perhaps the unchanged figure as a ratio of South Africa's GDP that South Africa's main budget deficit is expected to be at. The figure itself is 707.8 billion rand, which is what we're expecting to continue to have then. The consolidated deficit as well is also marginally better in rand terms, but unchanged as a proportion of GDP at 15.7%. government saying that they've tried to, at the very least, then broaden their financing strategy to include drawing down on sterilization and foreign currency deposits. Speaking of foreign currency deposits, it means that international investors may look at this and say to themselves, well, where to from here? Is my money safe? Is my money actually going to come back to me? Considering that things aren't necessarily going in the direction that South Africa had touted, even when it came to that supplementary budget. Yes, there is a changing sphere. Yes, South Africa will now have a contraction in its economic front of around 7.8%, according to National Treasury today. But the growth picture of 3.3% getting into next year may not necessarily offer up enough to say to themselves, we'll recoup some of those losses heading into other years. And of course, even the JSE has unfortunately had quite a large number of losses. The ratings agencies, what do they say? International investors, will they find this enough to perhaps continue in South Africa as well? Of course, we are on, what is it now, a junk status, that is, according to the three major ratings agencies in the country as well. So that does not bode well for South Africa in a time like this. We are expecting to get more word then from the finance minister. A press briefing is expected to come through then at the top of the hour, which will hopefully hold live for you as well. Do stay with us here on SABC News. We're going to try and bring that for you live here and try to get more word from the finance minister and perhaps get clarity on a few more issues as well. We'll cross on over to that briefing as it starts out in Cape Town. For now, though, let's take a quick break. Back right after this.